Good morning. It is Monday, March 4th, 2024, and this is the Option Pit Ticker Highlight Show. We are excited that you're here, and we're excited to talk about everything we're seeing in the markets. I want to lead off with something that I got two main points I want to talk about. And obviously the market is just off an all-time high. And the VIX is 1350. Now, there was a note that came out this weekend. I believe it was from Goldman Sachs. And what Goldman said was, over the last 3 months, you have made more money buying options than selling options. To which everyone in Trading Desk, everyone in Easy Button, everyone in Option Shopper, everyone in Delta Strike, everyone in every single one of our products went, no duh, because we have been cleaning up using this approach. And everybody here in the Ticker Highlight Show, buying options has been the play. And let me share with you a visual of how easy it is to see. All right. So this red line represents option implied volatility on the S&P 500. The purple line is 10-day movement. The blue line is 20-day movement. And so this is backward looking. All right. So this little peak here is the movement over the last 10 days. Where we are now is the movement over the last 10 days. And what I think is important here is that take a look at 10 and 20-day realized volatility, historical volatility, relative to this red line. And what do you notice? There are very few instances where it is dropping below implied. And so what does that tell us? That tells us that buying options is going to be easier than selling options. And it's not just in SPX. There are individual stocks where you're seeing this over and over again. Meta. I mean, NVIDIA is a prime example. Look at the movement relative to the implied. There are loads and loads of examples of proof that overall buying options is better right now than selling options. And in a little bit, we're going to be reviewing our track record. And one thing I want you to notice about what we review is that the general trend is option buying. Now, is there a scenario where option buying stops working? Yeah. Is it anytime soon? I don't know. But for right now, owning premium has been the way to go. And the best part about owning premium, if the market goes to hell in a handbasket, you are in a much better position than if you're selling premium. And I know everybody's worried about that wall of worry, that fear. Now, Alicia's probably going to tell you, what she sees and why she either is or is not full of fear. But right now, owning premium is the way to go. It is outpacing and outpaying selling premium. And that is what I think is the fundamental thesis. So one more time, and this would be a fun clip for YouTube Shorts. Since the beginning of 2024, the single best play in options, especially in the indexes like SPX, the QQQ, the IWM, all the major indexes that you play, the overwhelming best play and easiest play has been to own options via a strangle, or heck, with the direction this market has gone, via call. But for right now, and for the time being, if you're debating, should I sell a put or buy a call? Should I sell a call or buy a put? The answer is buy. And with that, now that I've made my kind of case for why around the track record and around our trading and what our thought process has been since we started the Ticker Highlight Show, I'm going to hand it off to Leisha, and she's going to break down what she's seeing in the markets right now. And I can't wait to see.
Thank you. Let's look at the charts. I am bullish. S&P 500. We have a very nice bullish candle created on Friday. This morning, we're kind of just wallowing a little bit. I think we're ready to trade higher and close higher on the day. Here's our 5-minute with a convergence of the 50 period and the 21 period. And I'm eyeing up these 514s already this morning. 40 cents. We will have a little resistance up here. Friday's highs at 514, but looking at the daily, I am bullish. And here's the weekly. Now I have on the top of my pitchfork, we go up into, almost 5,300. Now that's not going to happen overnight, but I think we're going to have a climb. We're going to climb like we did here, little pullbacks and climb higher. Fed is Powell speaking Wednesday. We have mid-March, the Fed meeting. I don't think the Fed's going to do anything until June. I think we already know what's happening in March, right? It won't be till June. Qs, I have resistance, but they closed above it, and they're ready to bust out of my pitchfork here and trade higher. Need to update that. IWM. IWM's trading above my resistance. Come back and visiting it here this morning. This may be a good place to buy IBM before it. IWM before it trades up to 209.5. Use a close below 206. That's what I have.
All right. Thank you, Leisha. I love the charts. May I put in a quick request on
Absolutely.
On a name? Obviously, we're watching crypto go off to the races. I think a lot of people are going to be asking about crypto. What does the chart look like on Bitcoin? And then can you give people just a 20-second breakdown, maybe using crypto, of what they're looking at when they look at a pitchfork?
Oh, yes. Bitcoin. Bitcoin has soared. Look at that.
It's pretty impressive.
Beyond my pitchforks. I may have to revert to a Fibonacci retracement or Fibonacci extension or something or I have to look at this more closely. So the pitchfork is basically telling, you grab, there are very few rules. All you're doing is, in this case, you're going up. So you're looking at a low, high, low. Here, you just grab it here, pitchfork. You're looking at a low, high, low, or high, low, high. And you just grab those. I use the wicks. I use the upper and lower shadows. And you just trial and error until your underlying lines up with your pitchfork. And then it's a good pitchfork. And then it trades away and you have to update it. But trial and error, keep trying, lining it up, and the pitchfork tells you where your support and resistance levels are, where it could bounce, where it could roll over.
And
That's
what
about all.
I love about
Pretty
the
easy.
pitchfork is that it's so old school, it's new school. Nobody, Leisha's one of the few people that uses it because people stopped using them in like the 90s, except for in commodities, right? And
well, that's where I picked it up in the commodities from those hog and cattle traders and corn.
People don't look at these in the indexes very much, and that's one of the things that I think really makes trading with Leisha real powerful, because she has some techniques that your equity technical people just don't know how to use because of her background as a commodity futures trader. All right.
Yes, a few moons ago.
Leisha, thank you for breaking that down.
Thank you.
And
Take care,
now, let's bring in Andrew T. Giovinazzi, the Oracle of Options. And
what am I doing?
You are breaking down the track record, talking us through why it's worked. I mean, I kind of laid out why it's worked so well, but we're going to take a look at kind of our past few trades. And then at the end, Andrew and I will preview what we're going to be looking to trade this week.
Okay. And then I have an update for there we go. And I have an update for the Amazon trade. I rolled my, here, I'll do this here. And then I will share my screen in 1 second. Here we go. How is everybody doing today? Somebody's asking time to short Bitcoin. I would say no. No. It's like Mark was just saying about, option premium in general, I think is underpriced because everything is going in a straight line. And that kind of movement tends to dampen realized vol. It makes it look like the market is going down. The volatility in the market is going down, but we're going steeply in one direction. So it's just that is the pattern or the condition that I see. So I'm not somebody that just shorts something because it's high. I'm more on the momentum side. So what are the fundamentals for Bitcoin? The fundamentals were the same when it was $100 as it is at 60,000. There aren't any, but it doesn't seem to matter. So let's go over the track record that we have. So we have in Amazon, we have an 80 call in March. I personally close these Friday for 270, and I roll to one April 185 call. FYI, ooh, I just filled something here. Give me 1 second. Oh, now I got to buy some Tesla. Sorry about this. I know this is a recorded thing, but that my trading comes first. Come on now. Let's get going here. And where are we? Sorry about that. There we go. Okay, good. I am happy now. All right. So, we'll need the roll
the track record, Andrew. It's done really well, right?
Yes, it has.
Sorry. All right. So let's just look at let's just look at our trades starting in January.
Yeah, and we have it up here somewhere. If we go to, if you go to the option pit, sorry, just trading gets me sidetracked. It's terrible.
Yeah, let's just start looking at let's look at the track record through January.
I'm trying to get it. The website's not producing here for me, bro. Come on. Let's go website. Let's go. Where is it? There it is. Is it there?
There we go. Right there. You can see our entire track record.
Oh, there it is. Okay, well, all right. Anyway. So we have a better one. We have a better one. Hold on here. Trading records. I think there I am. There's all my stuff. It does really well. Here we go. Ticker highlight show. Sorry. So you can see like win. We've had 3 losses out of 20 trades.
Yeah. And we haven't had a loss since December. And, generally speaking, ticker highlight show, we're buying strangles, we're buying put spreads. We might be buying, sometimes we'll do straight calls and puts. And because we're buying options and
Correct.
because the market has been moving a lot relative to implied, we've had some really nice wins. And what I really like is most of our trades are non-directional.
Mark,
right?
Real
There's
fast.
strangles and straddles, and that has turned into a nice win. Why don't you kind of pick one nice trade and kind of walk through why it works so well, Andrew?
Right. So the idea here to also, so for an Amazon, just so I closed the 180 calls on Friday for 270, and then I bought the April 185 call for $4.50. So I just rolled one. I sold 2. So I took 540 out of the trade. I put 450 back in. So I took $100 out. Right now, my puts are down though about $160 a piece. I never sold them. I think they're up as much as $50. And now I'm back to kind of delta neutral, and then seeing if Amazon, whatever, it goes to 190, I'll sell the call out. But at this point, I'm rolling to the April. But what's happening is, and what Mark was commenting on earlier, is you have to look at what you're paying for option prices in a bull market. You can't ignore the cost of the option prices. And we generally have been buying relatively inexpensive options in Microsoft, in Apple, if you go through it, in AMD, in KMX, in Coin, in Lulu, IBB, all the way down the line. Option prices, even buying like strangles. A strangle's a long call and a long put, and we've been leaning long because the market's going up. And we use the put to basically self-hedge the call. And you just, and then you let the trade run in a running market. That's what we have. And trying not to make it real difficult and, getting all freaked out. So we use a strangle here as a way to stop the option trade. So the idea is you can close a trade 3 ways. You can hedge your trade, you can use a stop, or you can use the relative position size of the trade, and then just let it do what it's going to do. I don't like having option premiums go down more than 25%. That gives me the willies, and I want to get out. So I need to make sure that I have a contra side, or I know that I'm going to kill the trade. So, but when you just buy a strangle, which is like from a call or a put, guy saying from 500 to 0. I assume you mean you put 500 to the trade and it goes to 0. Some people use that as their exit. They limit the size to 500 and they let it go to 0. I don't like seeing the option premium go to 0. I think that is too wasteful. I don't think you could have longevity doing that. Unless you have a habit of making just insanely large wins. But those are your ways to manage a trade. So the why we have been using strangles in this market basically is we have a very strong trending market, and a put will hedge your call. That way, if the stock backs off a bunch, your loss is stopped. or you can get out for even if you want, or even a gain if the market falls apart too much. It's the same on the downside. You want to lean short in something? Okay, that's fine. But in a rising market, yeah, I find it easier just to have the position stop itself out. You can sit here and, argue about what you think the market's going to do. Ultimately, that doesn't make any difference. The only thing that makes a difference is whether your position makes money or not. That's it. Everything else is inconsequential as far as I'm concerned. So you have ways to exit a trade. In the pit report format, all I do is we post the trades. If you want to actually see how to manage trades in real time, we have paying services for that at Option Pit, and we're more than happy, of course, to help you with that. I just record what I do, and I trade all my products. Mark trades his products. Lisa trades our products. So we're putting the trades on. But in this particular thing, all I do is record my exit after I do it. So when you put on any trade, I would recommend you have a way you want to exit the trade. If you do not have where you want to get out before you are in, or what the circumstance is for you to exit your trade, you're going to have a hard time having success. It's very, very difficult in my view. And I've been doing this for a while now, 30 years, something like 34 years, feels like a long time. That have an idea on how you want to get out of the trade, because it also is going to help you with how reasonable your entry is. So if we're looking at trade ideas today, like ideas I have for today are, I'm buying puts in stock in Tesla, right? On the pullback. I like IBM going to 200. We might even like NVIDIA going to 1,000. So the question is just how you set up the trade, what it could possibly pay us, and then you try to manage to whatever your goal is.
And setting up the exit before you actually press send on your trade will stop you from making a lot of bad trades. Because if you're saying I'm going to make $1,000 on this trade, then you set up the trade and realize, boy, this has to do X, Y, and Z to get there. It'll stop you from making a mistake trade. It also helps you set realistic expectations.
Yes.
A lot of services want to make 100%, 200%, 300%, and those are great. But if you look at the track record of the Ticker Highlight Show, something we give away for free, not a ton of home runs, but there's consistency. I'd rather, making 15, 20, 30% a week on one trade stacks really, really quickly. And
You're
that
not
is
going
one
to be
of the
unhappy
things
with
that
that.
I really enjoy.
You're not.
All right. So let's preview what we're going to be looking at for next week. Andrew, I'm going to take the screen from you.
You can.
We were gone last week, so we had a great company meeting. But we're going to be looking at one of several trades. We haven't done Google in a while, and this is one where the realized volatility is absolutely outpacing implied. SMCI, it's entering the S&P 500. It is $1,100 on a just fabulous short squeeze. NVIDIA, is it going to 1,000? We don't know. But we're going to potentially take a hard look at that one. And then probably next on our list, take a look at Amazon near an all-time high. But it's not just Amazon. Macy's is quietly at a 52-week high. JWN having itself a pretty nice run. Even Revolve back from the dead. Look at Revolve, Andrew.
Holy gosh.
And so we've got a cacophony of names that we think we can make a lot of money on over the next, and but when I say a lot, 20, 30, 40% in a week, being mostly non-directional, owning premium. And so be on the lookout for that. Our write-up comes out on Thursdays. Andrew updates the track record over the weekend, and then we do the ticker highlight show, and you have the ability to come and check it out every week. So I want to thank you for joining us today. And this was the Option Pit Ticker Highlight Show. So for Andrew T. Giovinazzi, the Oracle of Options, and Leisha J. Leslie, the Duchess of Doge, the Princess of Pitchforks, the Queen of the Campus. I am Mark Sebastian. I am your only option. This was the Option Pit Ticker Highlight Show. Have a great day.